What's up, everybody? Good morning. Welcome to the stream. What's up, everybody? Hello, hello, hello. We're back. All right. Market trading slightly higher over the night. Tapping that impact line. We talk about those. Just a lot of NASDAQ right there. Those red lines, we always talk about those, guys. Get everything ready for the day session. One. 53, 950. Oh, this is right at the head pressure right here. Oops. $89.25. Still trading above monthly, which is good. NASDAQ got dangerously close to its impact line. 53, 52, 50. All right. Inky's below MHP. Oh, nice. Or not nice, but thing to see. NASDAQ pushing all-time highs again today and trying to test that all-time high. Failed slightly short of it. What's going on with the music? YouTube hates me today. Market up in 3 minutes. Take a look at all the news and everything. CB consumer confidence number right at turn of the hour. Some sizable earnings this week. Decent setups there. Have some pretty busy trading days, especially because there's the holiday. Everybody's kind of running back to work today, you know. BVP's Thursday. Fed balance sheet and PCE Friday. I'd say like a medium impact week, medium to medium low. Not a lot of huge earnings companies. There's some decent ones, but not anything like crazy big. And then news events, you know, comparatively, there's not the biggest news week either. 4-day week. So there's some good setups I think we're gonna get. Those resilience is already negative. Nasdaq's kind of turning positive a little bit. Okay, so S&P's opening in the middle. Nasdaq's got here. I have no idea what's going on with my internet here. Everybody, good morning, good morning, good morning. Smash that like button, friends. Hit it. Hit it in the bottom right of your screen. Don't mind helping the YouTube algorithm out a little bit. Give us some love. We're going to incite the 50% rule. If we don't get 50% likes every morning, we're going to stop the stream. Hold on. Let's go about our day. Build the marketplace. Don't mind throwing some of our way. There's long setups here today. UVXY inside of liquidity pockets. There's nothing crazy there. Okay, things are good.
Apple Cash is an easy, convenient, and secure.
Alright, y'all. I wasn't kidding. I'll be right back. 50% likes. Let's go. Thank you guys. All right. Appreciate y'all. Be kind. Be kind. Give us some love. Try to help us out every day. Again. I don't know with the internet here. Okay. Thank you. Thank you. Okay. Spy, I'm looking for a long setup on a break on hedge pressure. That's it. That's it. It's only... only on the break. I love BSU. It's my favorite setup. Always buy bull zone with DD ratios greater than half. Check. Resilience is fighting to be positive, so supporting over here as well on positive res. So bull zone support. That's it. It's easy setup today. Q's a little different. Q's open above hedge pressure, so it's gonna want to stay above hedge pressure. But you are in like this weird, strange bear zone as well, so it's in an illiquidity pocket right now, which can get kind of nasty. Resiliences are strong, so half gap is likely to support. We should see. There's half gap right now on Q's. Not doing anything yet. Right here at the bottom. In general, overall bullish, yeah. So bull zone support, that's basically it. But you got that hedge pressure you're bumping into. So this V'd up trade right here is kind of what the expected one is. Problem is that from here, there's just bull zone. That's like the only place to go to. Here's the S&P bounce. The expected move is to bounce off a hedge right here. Let me start bouncing a bull zone here. Resilience on S&P is negative, so be careful on this one. It's starting to kind of lose its way here. Okay, so this is going to probably pull back. As these numbers are fighting, it's going to try to pull back. So this is the expected long, but the problem is that it's only just like a 5-point difference here. The best kind of trade is if it does create momentum and break hedge pressure on 30.5. It's a chase for me. One second. Did you guys have a good Memorial Day? Did we all got and do something fun? Just cracking me up consumer confidence as well. Yeah, just a little bit. S&P resilience negative, Nasdaq resilience positive, so it is trying to fight. The problem is that Nasdaq, we have these resistances here, so I'm trying to analyze this and give it some time. Nasdaq has pressures inside of here. Problem with illiquidity pockets where you have a bear zone above bull zone is the market does not like to be in the middle. It likes to move very quickly around it. So Nasdaq has support here. So this is the support for NQ today. This is the problem. QQQ has got no floor underneath it. Here. Oops. How am I writing QQQ? And why am I writing with my mouse? Here's my pencil. Okay. Up here. Bull zone support. Illiquidity pocket. So being careful inside of here, it hates being in the middle. These two, and I'll show you on the infographics, they're slightly different than liquidity pocket. An application, much different. It looks slightly different. Row here. These are on your cheat sheets in the Discord. You're using the liquidity map stuff. So illiquidity pockets hate the middle. As I'm saying that, it's moving quickly through it. So it does not like being in the middle. It's gonna want to leave the middle very quickly. Does not like the middle. Liquidity pockets are the bull zones on top. It likes to hug the middle. Here hates the middle. There's a repulsive force. It's both bearish and bullish at the same time. And you're going to see some wild volatile swings just like that. I'm glad I got the infographic just for the moment I got in there. Nothing for me yet. Expect to move its bulls and bounce in the S&P. DD ratio is still strong enough. Nasdaq trying to control the forward here. We get the catalyst coming out, possibly event in 15 minutes. So keep an eye out on that. We have yellow lines on the S&P right here. Monthly hedge and DD bands in here. So, and also the S&P, we have DD float, which is expected. Another thing we talk about when the DD ratio is greater than half, we expect there to be a push from here. Expected as the higher probable setup. So SPY is using bull zone would be problematic today. We're just coming back on a holiday, so be very careful. The expected move was down here. I have to kind of move this up. You can see the bottom. Redraw that. Now we're losing the expected move here, and resilience is negative now. No longer is that the expected move. Res negative is there. To the bottom side. So bull zone being lost, about 75% chance it holds, 25% chance it fails. Under all conditions, Kiki as the hedge breaks are rational, so that condition's slightly higher. This is not expected to survive this today anymore. This is expected now. This is expected to be high of day. So this coming down, I'm still not shorting it because now S&P is in a liquidity pocket where it's gonna, the middle is kind of random. Anything can happen from here. So no good setups today. Unfortunately, didn't show up to be nice. One may decide that the Nasdaq bull zone support is appetizing for them. Bear zone tap will be juicy. We all know that. Scalp, yes sir. Correct. Yeah. Just heard a Celsius crack open. Damn it! I can't hide from you guys, can I? A small sip. Here's what I'm just taking a sip these days. Nothing crazy. I used to drink like two of those things a day sometimes. And I take like a sip or two. That's it. That's all I need. Ever since I got on some dope ass medication that's starting to like save my blood pressure. Whatever's going on in my body is like super hypersensitive to caffeine, even tea. Like I'll get buzzed on tea now. Probably because I just stopped drinking it for a while. Get my health in check. Let's see if we get that bull zone bounce there. I got on hydrochlorothiazide and amlodipine. The OG combo. I am Mega been weak eyes on VIX, puts rising. Yeah, I agree. Keep your eye on VIX today. Let's just double check that. Oops, hold on one second. What the heck? It's been pretty helpful. Let's see, it's me and Matt quit the stream. Almost. There's that bull support on Qs. It's gonna be tricky from here. That's the long entry point on Qs. Problem is that the hardest thing about BSU, right, the hardest thing. Easiest thing about BSU is the return point. So it's halfway between your and hedge pressure. So 57 to 59, the middle is 58. So from here right to bear zone is a scalp potential. This. And that's all that I can see. This is it. This is a prime setup right here. What I like. Just kind of, what's that, Ben? All right, what do you trade? SPY chart. Why do you trade SPY chart and buying mini futures? Because, well, I don't trade the SPY chart. We use all information. So this is where you guys are here to learn some really good stuff about trading. If you guys are looking at trading S&P futures and you just look at an S&P chart, you've been doing it all wrong your entire life. If I wanted to trade the S&P, I just grabbed me some NQ off of the bull zone support. I just grabbed me 2 contracts in the trade debate. Still too rich for my contest account. Too rich for my blood there. But I'll take the gamble in the other account. Here, when I'm trading the S&P 500 and I'm trading futures, why would I just look at the S&P futures? Sure, you can trade the S&P futures, and other people do, and gives you information, but why not look at all their angles? This is future. Okay, so I'm gonna look what the S&P is doing. Okay, I'll look at futures. But why am I also not looking at equities to get more information? Why am I not looking at SPY as well? Futures has its own pricing mechanic. So do the indices. They have their own pricing mechanic. Why would I not look at the equity options as well? See, like charting in the 50s and 60s and 70s. And this is the decade as I'm talking about. Has like ruined trading for the modern day. Now computers are here and information's available. People are still kind of like stuck in the world of newspapers and looking at a chart and drawing a pattern on it. You know, as we have detailed very recently, you know, in some classes we've taught to the public, that, you know, charting and charting processes and charting algorithms and charting things that draw patterns on chart are nothing but failure systems. They don't work. You can't just chart something and get yourself an output, right? That's going to be showing you what the market's doing. You must look at all the data that's available for the S&P. The S&P is going to move up because all these things are trading independently. Futures are going to have their own supply and demand. Equities have their own supply and demand. Equity options have their own supply and demand. So when I'm trading futures, I'm looking at futures and SPY options, because I'm going to look at it in a three-dimensional sense. I'm going to look at all things together. Great question. I love that question, by the way. So does that make sense, bartending? So like most people, we're bringing a new paradigm of trading analysis, is that if you're going to trade futures, you need to keep your eye on clues in all three arenas. That'll give you more information. Charting is just kind of, in general, tricked people into thinking that looking at the price action and patterns of the price action of the one thing is going to help you trade that one thing. But as in reality, it is that we're looking simultaneously at all markets together. I'm looking at the S&P from all kind of angles. Right now, I'm looking at the SPY and its relationship to the index it's tracking that follows a bunch of stocks that it's tracking. I'm looking at the SPY options that are showing its own trading from its own risk out there, people having supply and demand and exposure to that instrument itself, liquidity maps. I'm also looking at the mechanics of the S&P futures, which is my charting of futures here.
Shopify helps you sell it.
So I'm looking at all of it together, not just the charting and the instrument I'm trading, but all of it together. Does that make sense? To give you an advantage over the people that are just charting that one thing, you now have a wealth of information, not just that. So liquidity maps in SPY are based on options in the SPY. Futures, we don't do liquidity maps in futures and futures options because the futures options aren't good at that. There's not a lot of them, so the landscape is scarce. It's like spotty. You go to SPY options, it's the most liquid options chain on the planet. There's more of those things traded than anything else, options wise. If you go to S&P futures options, you're not going to really see a lot. So liquidity maps there don't really show or reveal the risk. And the way that people trade the SPY to hedge their positions in the stocks, and buy SPY and SPX options to hedge those positions as well. They also buy futures to hedge. All three of those things are connected. So say that you're like a firm that owns a bunch of stocks. You need to go out there and hedge your stocks. You got so many options of where to go show the world I'm hedging here. You can go short futures. You can go buy SPY puts. You can go buy SPX puts. So what we do is, where did that person who's trying to hedge the long position, where did they enter the market with their hedged position at? And we're watching all of it at the same time. Does that make sense? I want to make sure I keep my eye on everything. This is not where DD bands are. Don't look at this. 52.88. There's yellow line right here as well. NQ is trying to fight pretty hard. The S&P is looking for bear zone tap. No hate on NQ today. NQ's giving us some love. Numbers coming out in 4 minutes. Yeah. Did that answer your question? So when the clues that we give you from our input is not just the chart itself, but as much information about the index as you can get. Who's trading it, why, where, how, which instrument. The index can be traded in so many different instruments. He's starting to get a little hurt. It's starting to feel it. I got two at 18,850. It's on my screen right here. I just grabbed a quick screenshot of it. So 18,850 is I got used right along in bull zone. Just for the quickie scalp, 700 bucks. I can take it. I don't hate it. Okay, I'm closed. I'm closing out for the event. I'm out. So I just took the scalp in and out. I'm done. I'm gonna let it simmer. We have an event coming out in 2 minutes. I'm not gonna trade through the event. I hate trading through events. Rod, ES stack the red line. If I can get arrow down, take pick long. Let's go down 52 bear scalp. Yep, so far. Yep, you nailed it. That scalp was pretty easy to see. The S&P is completely detaching though. So our technology that looks at SPY options to give you that insight into the market itself, liquidity maps are based on equity options. We don't do them in futures. So we look at so when we look at the index, we'll look at the index, its desire to track the stocks, its own risk and its own positions in ETFs, its own risk and its own positions in futures. Our futures indicators are dynamic hedge pressures. Sorry, our equities tools that we use: liquidity maps, DD, resilience, and then the dynamics. Futures, we convert the dynamics to futures levels. DD bands are futures, yellow line, red line futures. So our futures indicators are over here. These levels. Our stock indicators are over here. Pairing them together, it's like getting a twofold visibility. You get to see this from both angles, right? Does everybody understand that? Okay, 9 o'clock, news just came out. Let's see what we got. How are we working on this? See if we got consumer confidence slight beat. Oh, the expectations. 102 is a decent number. It's pretty good. The market's not responding really at all to it, so I would be a little concerned to see that there's nothing. 102 is a pretty decent read. We've been above 100. It's lower than what it has been, but at least it beat the forecast. The forecast was very low. The consumer confidence number is actually kind of in decline. And 102 is still following that trend off of the highs that we had like at the end of last year. So the consumer confidence number is kind of being nuked. I don't think this is going to be perceived very well at all. While it is above 100, which is the good sign, it's clearly in decline over the 6-month period. I think people are looking at the trends. So this is a wash. This is a non-event. Information came out and we kind of just hugged where we were. It didn't move in one direction or not. It's a non-event on that read. Glad I closed out my scalp when I did. Wasn't too much. But here's the support. This is the one place to support from if there is a support. It's here. That's it. If there is a support, it's here. You have yellow line here. You have bear zone support here. So these are the two places the SPY could possibly support. Nasdaq resilience just popped positive at the downside of that news. The S&P is fighting to go positive as well. With the S&P negative, it's going to resist half gap and be below this 530-ish level. With QQQ being positive, it's going to want to try to move its way up here. The problem is that you're still kind of sandwiched. There's no breakout potential in either of these. It's going to require a bigger event to push. So we'll see. If there is a support at all, these are it. This is it. If there is one, this is where we'll be. This is it and only it. Kind of love we can just read the market so cleanly today. Now the risk is really high, but if there's a support, this is it. And as I'm speaking, there's a big fat green candle there. Love it. Let's go, baby. Now like that. So to me, it's like, I think charting has kind of poisoned people's eyes because they get used to staring at the price action of one thing and saying, what's the shape of this thing and how can it predict what it's going to do next? Which what charting kind of does. But when the wealth of information, you know, because like charting and a lot of these indicators were literally invented in the 60s and 70s. And so with like the onset of all this new information, we have options order flow now at your computer screen. You can literally come read options order flow. From the comfort of your own home. You get information now that people weren't ever able to have, you know, literally 60 years ago when the RSI was created. So the idea is that the newer, broader indicators that you have available to you, built by providers like us, give you a lot more information. I know I might be kind of a wuss by closing out earlier. Right here. But I'll take it. Thank you today. It was 800. Well, 796 after commish, but that I took the wrong fucking thing. Okay, that's the realized channel for commish. So 815. That's my trade today. Just that scalp right here to here. That's all I did. You try to find numbers coming out. Yep. Dow dropping, looking very bearish. Rod, nice. Where's Rod? What did Rod say? Bring AR down, take long. Rod line down. See bear sell scalp. Yep. So you got that bear scalp along the way. Yep. I like that. Nice job. So yeah, so if you got the bear scalp and the bull scalp, those are the two predictable trades today. So that's good. Let's remove all this, and I think the day's over. Nothing else to say from here. That's decent. I'll take $800 I didn't have before. Does market react to news on the delay lately? I think lately the market, yes, but I think to explain that, it's not the market's reacting delayed to the news, is that the market's just not reacting to the news at all. The market's waiting to see if there's a reaction to the news. And then when there's not, then the traders are stepping in and saying, okay, back to work. Because I think all news these days is predictable. There's nothing we've seen that has surprised us in probably a couple of years. Even the Fed tapering off their rate hikes was somewhat predictable. And we were even predicting it ourselves with our analysis of all the information available to us, and the jobs data and all that stuff pointed to the idea that inflation was going to naturally come down on its own. And so, you know, I think that even the fact that Jay Powell is going to say we're going to cut rates was very predictable as well, knowing that that was the direction they were going to go. It hasn't happened yet. You know, we're not like massive rate cut environment. We're kind of like holding the fort here. But I think that the people are kind of not getting shock news anymore that's really jolting the market one way or the other. So the news comes out, market's like, okay, let's see what happens. And then nothing happens and be like, all right, whatever, back to it. You're right. And that's kind of what I think is happening, Maz. NQ trying to fight. Yeah, so I get that little scalp off of bull zone, the NQ right up to the halfway point. Now I did close out early because I am kind of a wuss, but this trade definitely is an illiquidity pocket. I look for these to complete the move to hedge pressure. I mean to bear zone. I kind of have a fun announcement. Just to say that, like, one of our next pushes into what we're creating for the ecosystem here is the ability to do trader funding programs inside of Rocket Scooter. To open up that door to everybody. And of course, you know, having that convenience would be so great. And having that ability to expand into that when we have a marketplace at launch is really great as well. We are... Let's just say that... I can't tell you too much, but let's just say that we're building something. We're going to be building something for that. With a separate team, we're gonna like expand our team just to build that. So it's not gonna slow down development of the platform or the marketplace. We have a whole separate parallel project path here. So for those of you that like doing trader funding programs, it'd be hella cool to be able to have them all accessible inside of Rocket Scooter. Res is still negative, so the illiquidity pocket, if this taps hedge pressure, day's over. Day is over. Okay, so we expected it to start above here. Typically, if you start above hedge, you expect it to be above hedge 75% of the time. With a clear definitive break with negative resilience, the idea is that this is gonna have a hard time making its way back up. So if I were still on my scalp from here to there, I would certainly close out off of that. If somebody got the bear scalp off of negative resilience right here, once you broke through hedge pressure, res is negative, it's very easy as pie to see that it's going to fall. We all watch that happen. We forecast that one. And then right at bull zone, we forecast this one. So who here did the bear scalp if you did trade? Who got the bull scalp if you did trade? Or did you do both? And who is in a trade now, or who's done for today now? Got the bull scalp? Clean, Anthony. Awesome. Is there a ticker for gold on our Rocket Scooter? For gold futures or gold ETF? For gold ETF, you can use GLD. For futures, there's a gold ticker, but I don't know what it is. Let me look it up. F.us.gce. Yeah, trading with them 1 AR. Nothing good. 5317 calls strongest for resistance. I don't disagree to that. That's pretty much the strongest we have, the yellow line. Basically it. A couple things line up there. Bear zone, yellow line, they both kind of end up at the same spot. It's neat that you'll get some symmetries like that in the market when you get multiple things line up. What I always envisioned was to have a way to describe that to everybody graphically, like on one chart. An example would be if we were to auto draw yellow lines and you had another, like the more supports you have from different angles on top of each other, the stronger it would be. So we kind of watch them at the same time. It'd be kind of cool to have some kind of indication that would say that. Nasdaq resilience, strong as ever. Strong as ever. So Nasdaq to support from here to here likely. See if we get it. And that's really all that I can see in this predictable day. Sorry, the predictable part of the day. The bull zone tap when the S&P failed is about a 75% success rate on bull zone from our back test. Still great odds, right? Bull zone support 75% of the time. Marketplace is pushing on 60 vendors now, which is our target was at 50 at launch, and we get, you know, like 2 or 3 every day now. You or your friends have a Discord, you or your friends have a service, you sell indicators, you do anything, or you just want to, you know, start having your social presence build, let me know and we can get you on the marketplace. You know, anybody in house here, lifetime members here, you have your own community, your own identity, your own anything, we want to feature you and give you a free spot on the marketplace. Our friends here at the Rocket Scooter Group. The basic vendor package costs nothing to list your products, list your links, list all your affiliate links. You can put everything there on your page. I'll show you what it's going to look like. Maybe a little. Over here, you can go to, I guess these are all a lot of our vendors that are already there. Some people are affiliates of Rocket Scooter, some people are affiliates of different things. I'll pop up somebody like Ace the Kid. You know, Jordan puts all of his different links here. It's similar to like a link tree. You can list all of your links and products, advertise them there. The marketplace is looking sick. I love it. You guys like the look of it? You can search by product. You guys want to find Discord products. This isn't fully functional yet. It's not indexing like the correct amount of things, but you'll have their Discords, their communities, featured products. You can have your own platforms, white labels. You can have your own entire platform ecosystem. You can have your own system inside of our system where you sell a platform and indicators for it. And some friends of ours, there's Liquid. We meet with all these people personally. We talk to all of them. All these folks have really good stuff. There's some free things, like this guy has a free Discord, so even listing free stuff just to be on there. Elite Trader Funding, they have their evals listed here. Galaxy with Mondo. Wolf has a newsletter with all of his different things, his different affiliations and products and stuff. So Marketplace is going pretty good. So the idea with Marketplace is that you guys can get more tools in the same place. You know, it's like if our tools aren't all you need and you want to shop around and get other tools, as we grow and expand, the idea is to have other people make other things that you guys can add to your toolbox. Discord access for what? Watermelon Sugar High, dude. That song, every time I hear that song, I think every time we all hear Watermelon Sugar, it takes you back to the days of COVID. When you're sitting outside with your friends, you know, eating at a picnic table, curbside pickup food, and that song played every 5 minutes on every radio station out there. Watermelon Sugar is like literally the theme song of COVID. I took you back. It was like, no. You remember? I just remember sitting by, at the time I had just moved back to Houston. And before I got my house, I had an apartment in the city, in like West U, and like the bougie area where all the doctors stuff live. And so I had like this, you know, I had this like really nice pool there. For a little bit of time I stayed there back in 2020. And so, the COVID thing delayed my house shopping for about 2 years, because I was looking to like stay and see if I liked the area for a year. Then COVID hit and I had to stay another year. But I had a kick-ass pool for a little bit, which is really nice, before I got my house that I have now, which I always regret. Like, that's the one thing about city, because I live in the city, right? So the city, you get a couple of choices. It's either apartment, condo, or townhome. Or if you're like, you know, like Beverly Hills rich, you can probably go in the big mansions with the big ass yard, River Oaks. So, you know, it's kind of like, here I have a house with a lot more space, but I don't have a pool. It's really sad. There, you know, you have a really nice pool, but then you don't get a lot of space. It's like, city life. So I loved it though. Since I had a pool and no one else, and my friends never really, they would always come over to my place. I was like the COVID hangout spot. And so everyone would come over, we'd eat crawfish, we'd sit by the pool at the picnic tables and just hang out and listen to Watermelon Sugar. And that was kind of it. City life and space in Vegas. Oh, that'd be nice. Jace is debating between a city condo and a suburban house now. See, now here's the thing. In Houston, in the suburbs, you can get it all. You can get a cheap, big house with a massive yard and all the fixings for practically nothing. The downside is it's the suburbs and you're probably 30, 45 minutes away from the city. But imagine getting yourself like a, you know, 6,000-7,000 square foot home for, you know, $500,000 or $600,000. Like less than $100 a square foot. As opposed to like 300 plus for us here in the city. Same in Austin. You live there for 2 years. Yeah, like exactly the same. So living in this, when I say in the city, I mean like downtown. Like I live within walking distance of downtown. So like this is like the heart of the city. So here you're not going to get yourself a yard. You go a little bit outside the loop, you can get that easily. But I wouldn't trade it for the world. I love living in the busy city. I love having my sunglasses stolen every time I don't lock my car. You know, I love having my Amazon packages stolen 1 out of 5 times. Wouldn't trade it for the world. I had a house in the burbs for a while. Before I moved back to the city, I lived in Pearland for a long time. which is a suburb of Houston. And I had 2 houses there actually. And 1 house there and an investment house there. Both of them are really big and really inexpensive and really big yards. That's what you do get in the burbs in Houston. There's tons and tons and tons of space. But anyways, during COVID, I lived in a mid-rise in the city, and I just had this like ball and pool. It was so nice, and everybody was like, "Can we use your pool?" I'm like, "Yeah, come on over." I'm like shuffling people through the locked gates for the pool during COVID because everyone was bored and sitting around. And I also had COVID in 2020. Like back when people thought it was a hoax or whatever and they didn't think it was real. And I was like, patient 0 over here. And once I got over it, I was like, yeah, I got it. I got over it. Quick bathroom break. I'll be right back.
So this is your first time buying a home?
Yeah, this is first time doing any of this.
And honestly, we definitely have the stress and anxiety part down.
I know this can all seem a bit overwhelming, but everything is in the email I sent you the other day. It'll go a long way to ease those new anxieties. Information about financing, inspections.
The email.
And if you haven't looked at it yet, let's go through it together.
Oh,
Okay.
Expertise. Just one of the many ways an agent who's a realtor works for you.
All right, we're back. Everything is old or expensive in Pennsylvania. Looking for Delaware or Philly adjacent. Ah, yeah. Feels like you missed anything? Nah, I took a long scout from here to here, closed it. Kind of sitting waiting on this one. Nothing too crazy. So, gonna call it a day. Guys, thanks for tuning it in. We love having y'all here. Any questions? Anything you guys want to go over or cover before I get out of here? A lesson or teaching you guys on something? Out the door, right? The market was bumping right up against hedge pressure, so there really was no long setup here. It was a BSU, right? So BSU has a bull zone support, so the halfway distance between hedge pressure and the bull side, right? So BSU has that middle right here. That's it. There really wasn't much to trade off of, which is why I didn't take it on the S&P. There was a little bit of movement, and that's the expected move. But then after that, I didn't take it. There was just no upside because you had this move here. Now, remember, you open below hedge pressure, you're likely to stay below hedge pressure. I drew that if there was a break, 530.5, I'd take the long chase on the break, but we didn't get it. So that scalp ultimately started to fail because resilience was less than 0. As you see, the market's trading up here with a negative res. It just filled its gap and created a picture, which is what you expect when resilience is less than 0. It's all textbook today. Nobody should have been squeezed out of any of this. Pretty solid. While the bull zone tap is typically something I always do take, when there's not a lot of travel and the indicators are going against me, I don't. But I did do that same trade in NASDAQ. I got from here to here and I called it. And that was just the only scalp potential I saw. Some people jumped in on the short on the way down. NASDAQ opened above hedge pressure, so it's wanting to try to make it above. Because remember, it tries to stay where it started most of the time. Either if it opened a bull zone, it wants to stay in bull zone. Open below hedge, wants to stay below hedge. So the expected move, we say expected doesn't mean it has to happen, but the highest probability move with all things being equal. The S&P ends up right here where that is. And the NASDAQ likely ends up somewhere here if all things were to reset. See how there's not a lot of travel and predictable travel on this. Just be very careful. The negative resilience, my brain tells me that this is resistance now, that the expected move is likely to not happen due to the negative nature of that. This is likely to stay down inside of here. So not longing from here. And then wanting to miss out because in reality, there's only, this is like 10 points of travel. There's so much better trading other days, juicier trades other days. And in reality, the clear trade, clear as day, is if we broke here, if. That's such an easy setup. If we break to the bull zone, I'm chasing all day long. I always take long chases if I can. NASDAQ, if you break through the hedge pressure level, though, the problem is that you have a big fat liquidity pocket right here. So the market's gonna be random as soon as you hit. So with all things being equal, I'm looking at this. This is negative. This is positive. You have divergence between the two. It's not an easy read. So, we all did get our scalps off of different pivots that are easy to find. It's nothing really to pick a direction from here would be a little hard to do. So it's good to be able to say it's going to be hard to do, and I'm going to take the safe play and get out. Call it a day. The easy part of the day is over. The hard part is here. The sit and wait is here. And not worth my time, so we're going to call it. We love you guys. Thanks for tuning in. As always, killing it over here and having a good time in the morning while we do it. Thanks for tuning in. We'll see y'all later. As soon as marketplace stuff is launched, we'll get back to doing our normal routine. I'll be doing a lot of Zoom calls, things like that. We're changing the format of the show in the mornings. I was hoping to have that start today, but we're actually going to start a little bit later in the week. So new format in the show. I hope you guys like it. Marketplace stuff is launching live, so we're going to very soon after that be able to get Rocket Script to you guys and have y'all able to code your own indicators and play with ours. And after that, a backtesting module, we're going to be working on that here and working on getting trader funding programs inside the platform. Lots of stuff going on here at House Rocket Scooter. Love it. Love having you guys here. Thanks for tuning in.